Good morning, people. Hope you're all doing well today. It is Tuesday, if I'm not mistaken, April 16th. And we had a pretty significant move yesterday to the downside, right? I was looking for some of those longs, and then everything just capitulated. So, on today's session, right, let's look at some of this news and break down what we have in store for the plan in itself, and give you some of my thoughts around this market. So, um, we've seen rise in tensions. There's also been military talk out of the U.S. Right, the phrase "the best defense is a good offense" is alive and well as countries continue to boost their military spending to record levels. Ahead of the pack is the U.S. naturally, which is allocating $825 billion in defense expenditures for 2024. That's an amount equivalent to the military expenses for the next 10 countries combined. So, and if factoring in non discretionary spending on defense, such as veteran benefits, and the number would already be north of $1 trillion on an annual basis. So, taking notice of the spiraling conflicts taking place across the globe, many Western countries have been warning that the era of peace dividend is over. France, which has been leading the defense spending charge across Europe under Macron, is raising military expenditures by more than one-third in the coming years. Another boost for NATO has come from founding member Norway, which has presented plans to double the size of its defense budget, while the U.S. Congress is debating the best path forward for a vote on the aid to Ukraine, Israel, and Taiwan following Iran's attacks over the weekend. The call increases in defense spending comes at a time when the West is struggling with diminished military recruitment, as well as a pressure of giant debt loads and higher interest rates. Some have looked to defense stocks as a flight to arms trade, but the returns there haven't always been exemplary, and only 4.4% of Wall Street subscribers see the sector as an effective hedging mechanism. In fact, defense giants like Raytheon and Lockheed Martin are trading at roughly the same levels that they saw before COVID in March 2020, despite a huge new contract like the recent announcement of $17 billion ICBM in interceptor program. So existing backlogs and production capacity don't carry over to immediate new order revenues, which may be reflected in share prices. It also takes a long time for Western militaries to procure advanced weapons, while contractors have to ensure their margins, especially for hefty projects that may be subject to political or strategic reviews in the future. So it's also important to note that some defense stocks are looked at more for their dividends, though there have been many share price winners in the sector. So as this continues, a lot of people are putting pressure on this market from those tensions, but it's most likely something else. Realistically, these things are priced in ahead of time. So there's more continued downside in this market. You saw a massive drop yesterday, and it doesn't seem like we're necessarily out of the woods, and I'll talk about that in just a bit. Out of news out of Samsung, right after Samsung was awarded up to $6.4 billion in grants to boost its U.S. Chip production, Commerce Secretary Gina Raimondo said that she expects all the $39 billion in CHIP Act grant money to be allocated by the end of the year. We're on a roll, she said, on the sidelines of the event announcing Samsung's grant. We've done 3 of these in the past month. We'll be doing more in the coming weeks, and the rewards so far have focused on advanced chips, with large grants going to Intel, Taiwan semiconductor manufacturing, and the remaining grants will focus on memory chips and investment in suppliers, wafers, and chemicals. So, as we've seen with what's going on, right, decent downside in these market chips, right, Nvidia hasn't necessarily dropped like crazy, right? We're still above last week lows and holding kind of well up pre-market slightly. AMD is one of the leaders to the downside here. It's up a bit pre-market, but we're breaking some significant levels on this. In terms of other news, there's not too much other than Fed speakers that are jumping on the wire today. 9 a.m. Now, Fed's Jefferson speech. In the afternoon, we have back-to-back, 12:30 p.m. Eastern. Fed's Williams at 1 p.m., Fed's Barkin, and the head honcho himself, Jerome Powell, at 1:15 p.m. today. So afternoon's going to get interesting. There's probably going to be more volatility that springs from this, and market movement is expected. Higher volatility, reducing trade size and trade quantity, in my opinion, would do well, right? Looking for slightly wider stops and being extremely selective with what's going on. So this downside that was led by yesterday, right? We can't necessarily, I don't want to necessarily pinpoint one specific factor that's attributing to this, but there's been a decent amount of sell pressure, right? A lot of people are talking about taxes and whatnot, tensions, right? The list goes on. But order flow is what's kind of leading the charge here. As we stand, whoops, it's not at all what I meant to do. As we stand in these distributions on this market, what we can see right now, let's actually move this a bit where we can look at let's look at 100-day here, so we can get a little more volume to the lows. What we've done is we've accepted into distributions lower and lower and lower. Right now, one of the gauges 5108. That's the new distribution start that brings us even lower. We have a single print and an unfinished auction back above this 25 area on the S&P. If we make the move above that, we complete the auction into that 50, and then that larger sell can come, in my opinion. If we start moving under the 08, just continuously look for a sell. I'll be targeting the 80 and the 60 to the downside before any kind of buy-side momentum. I'd honestly even target the 30 to the downside before any larger buyers come in, but I think the 60 pronounces a very solid bounce, because what it does is it completes an auction that was unfinished all the way from March 5th, if I'm not mistaken. Yeah, right here. So we complete this auction, actually February. We'll complete this auction all the way down. That brings us into this 60 area where we could expect a more solidified bounce. But until then, right, I'd be very cautious about trying to buy these dips continuously, even though this whole year has just been buy the dip, buy the dip, buy the dip. Everyone's conditioned to just continuously eat these dips up. And what I'm looking for at this moment is to see how prices react under this 08, or if prices react in and around that low 20. That's going to be the main gauge for me to find the positioning of this move. And so far, right, some of these buyers are trying to press off these overnight lows, but I wouldn't be too happy with just this constant buying, right? Something to keep in mind going forward today. So with that being said, right, I am looking for upside, but I would like to see them pop a little higher for that upside continuation to come in a little more aggressively. That's one of the main things I'm looking for today. And if we start selling off the open, as long as we're under the 08, I expect to see these sellers really hammer this thing lower. So I'm not necessarily bullish into this, but I'm not going to be stupid if we start bidding back above that 25, because we have a 25-point move above that. Keep that in mind. Let's open up this live trading room. I'll see you guys all in there. We'll see what the Fed speakers have into the afternoon, and we'll go from there. So plan set in motion. Let's trade diligently, really understand the context of what's going on, because that helps us keep on side. And let's do it, right? Check out community.tradeproacademy.com for our free Discord. You can find a lot of resources in there. And I'll see you guys on tomorrow.